From the floor of the CME Group, this is Danny Riley on this Thursday, March 18th, Expiration Thursday. You know, look at the euro currency is down sharply. When we got on the floor this morning, it was only down at about 70. And in about the last 25 or 30 minutes, it dropped down to 140. The dollar is very firm here today. On the other side of this, crude oil was only down about 50 cents and it dropped down about 90 cents. And when that happened, it took the S&P with it for the ride. You know what, we're into the expiration here and the market's up at a high. There's a bunch of little things floating around here that we think the traders should know about. One, there's a lot of big open interest in the SPX 1150, it's the 1170, 1180 March call spread. We figured that the way the markets were setting up, you know, as you go into the expiration and the market moves higher, these guys that hold these types of positions, they have to do one of three things. They have to either get out of the position, use futures to protect, or roll higher. And as the market was going up this morning, we thought that the market had a very, very good possibility of shooting up toward the 1170 level. But you know what, as every good story comes to an end, the markets here are seemingly getting a little weak as we go into the expiration tomorrow morning. You know, we're up in a new high. You know, we're up, what is it, from 665 up to 1170-ish or 1165-ish here in the S&P, and we're coming into the end of the week and everybody's a little long and everybody's a little concerned about some of the news that's out there floating around. Greece is back on the spotlight again this morning because there was talk that they may go to the IMF for funds rather than go to the Eurozone, you know, where they should be getting their money, and that's got France all in a huff about, you know, what they're trying to do there. The other thing is that there's a rumor, and I want to be specific about this, there's a rumor floating out there that there could be a surprise hike in the Fed's fund rate here overnight. This has got the bonds, the discount rate overnight, excuse me, not the Fed's fund rate, the discount rate. This had the bonds somewhat bid for a little bit, but you know what, the guys down here in the bond pit don't believe it. They think it's all BS and it isn't going to happen. But you know, we live in the real world here, and in the real world, the S&Ps are back up at a high. The way we see it, most of these little sell-offs that occur during the day are all part of the big back and fill picture that we've been talking about for many months, which has been the catalyst for the big up move that we've been seeing since last year. You know what? We don't really know what to think going into the latter parts of the day. The markets look a little tired, but if you follow those patterns of the market going up early in the morning, coming back down, you're generally supposed to look to buy that weakness. Statistically, today is a good day, tomorrow is a good day for the March expiration, but again, we're up at a big contract high here, and we just don't know what to think as we go into the latter parts of the day. We'll be back tomorrow with another big update.